What do you mean the bank is out of money?
Insolvent? You only have enough cash for the next 3 customers!
Hey, what's this? Just a second here. No, I don't have your money here. It's in Bill's house and Fred's house.
Hey, what the hell you doing with my money in your house, Fred?
Brace yourselves as reports of a jaw-dropping $472 billion bank run that's been sweeping through the country in recent months. But wait, that is not all, as the real estate market may be in a, quote, all hell breaks loose moment that will send shockwaves through the industry and economy, not to mention global de-dollarization. Now here's the one Bitcoin question. Could this be the pivotal moment that Bitcoin has been eagerly awaiting? Is it finally ready to claim its rightful place and fulfill the prophecy of hyper-Bitcoinization? Join us as we decipher whether Bitcoin is about to step into the spotlight it was always destined for and explode. Let's get it! Let's get it started with this article. Americans pull $472 billion out of U.S. banks in 3 months as depositors exit in historic numbers. According to the FDIC's newly released quarterly report, depositors took a total of $472 billion out of their accounts in the first quarter of this year, shattering a 39-year record. The quarterly decline is the largest reduction reported in the QBP since data collection began in 1984. This was the 4th consecutive quarter of the industry reporting lower levels of total deposits. The primary driver of deposit flight came from unsecured deposits, said the FDIC, as people moved to protect capital that was above the $250,000 FDIC insurance maximum. In case in point, the amount of insured deposits held by banks actually increased during the quarter as people diversified their risk. The mass exodus follows the failures of Signature Bank, Silicon Valley Bank, and First Republic, which were triggered in large part by the Federal Reserve's aggressive interest rate hikes. Bank runs typically occur when the depositors lose confidence in the bank's stability and rush to withdraw their funds all at once. This sudden and mass withdrawal can cause severe liquidity problems for banks and potentially lead to its collapse if it fails to meet demand for withdrawals. During a run, the initial trigger could be various things, such as rumors of insolvency, economic uncertainty, tick, we got that, or lack of trust in the banking system. We're at a record high. As news of potential issues spread, it can create panic among depositors, causing a self-fulfilling prophecy, a self-reinforcing cycle where more individuals try to withdraw their funds, and that can further exacerbate the bank's financial strain. Man, the consequences of bank runs can also be severe both for the bank and the broader economy. Banks heavily rely on depositor funds for their lending activities, and the significant withdrawal of funds can severely limit their ability to provide loans, leading to a credit crunch and hampering economic growth. Additionally, if a bank collapses, there's even further ripple effects, which can impact other financial institutions and potentially cause a systemic crisis. $472 billion. Such a massive amount from U.S. banks, as reported, could indicate a complete loss of confidence by depositors, and such events potentially lead to the undermining of the stability of the bank, and the ripple effect across the banking sector can be widespread. Bank runs can have far-reaching effects even into, say, real estate. During periods of economic uncertainty or when depositors lose confidence in the banking system, there is a possibility of increased bank withdrawals and a reduction in credit. And this can lead to a tighter lending standard and make it more challenging for individuals and businesses to secure loans for real estate or other investments. And if a bank run escalates and results in the collapse of multiple financial institutions, kind of like we're seeing right now, it can have significant implications for real estate. And an example of this is the availability of mortgage financing may decrease, leading to a decline in property purchases and cause property values to decline. Or on a flip side, it could cause prices to rise due to a rapid quantitative easing and stimulus injection. Moreover, if the banking crisis is severe and widespread, the detrimental effect on the overall economy will result in massive job losses, reduced consumer spending, and a slowdown in real estate. Recent news, all hell is going to break loose. Barbara Cocoran issues warning about real estate market and interest rates. The Shark Tank star and real estate mogul Barbara Cocoran issued a stark warning about the future of the commercial real estate market as buyers and sellers head into the summer months. Appearing on Fox Business, the Claimant Countdown this week, Cocoran said the commercial real estate market is headed towards trouble. Despite a plethora of commercial vacancies in cities, people aren't going to jump on them for pennies on the dollar because there isn't enough confidence to purchase these buildings right now. No one believes it's going to turn the corner, she said bluntly. People are staying at home. Our best office buildings in Midtown Manhattan are 50% occupied, and in most major cities or in secondary cities, we have a 20% vacancy rate. No one wants to take that chance. Corcoran's stats reflect a larger trend nationally. According to data obtained by NBC from commercial real estate company JLL, official real estate vacancies in the U.S. reached levels as high as 20% by Q4 of 2022, the highest they've been since the Great Recession of 2008 to 2009. Cocoran believes that the regional and small banks will be the ones to suffer as many businesses are unable to afford or are late on mortgage payments to their lenders. Quote, I don't see that turning around, she said. I think it's going to be a bit of a bloodbath before it gets better. And here is more from Cocoran.
But on Monday, Tesla CEO Elon Musk said, home values and residential real estate will follow the meltdown commercial real estate is experiencing right now. Whom should you believe? Well, if anybody should throw in their 2 cents or 2 billion cents into this argument, it's the queen of real estate, Barbara Cocoran. She joins me now in a First on Fox Business interview here in studio. Barbara, great to have you.
Pleasure to be here.
Oh, whose side do you come down on?
Oh, definitely. There's no relationship between the commercial and the residential. And the residential is starting to rebound, I agree. But the commercial is in trouble, yeah.
Okay, so Elon's wrong.
Of course he's wrong yet again, but he's cocky. And sometimes that counts for more.
Yeah, I get it. Well, we're talking about it. We're giving him oxygen on that issue, but not necessarily a real estate guy, nor is Michelle Bowman at the Fed. But you sitting here for us, tell us exactly what you see, and let's separate these. Residential real estate.
Well, what we really have holding up the market is the bottleneck that's out there. Sellers don't want to move from their apartment or their home because they don't want to take on higher interest rates, and buyers are too afraid because they're getting less house. In fact, they're getting half the house they would have only 2 years ago. So you get a Mexican standoff going on. But things are changing. The people who are going out there and buying are finding they're overbidding. They're having a hard time getting their hands on the house. And right now, what everybody's afraid of is the high interest rates. But the minute those interest rates come down, all hell's going to break loose and prices are going to go through the roof.
Well, look at the 30-year fixed.
Yes.
This is the latest price, and you can see it week over week.
Yes.
It had a 6 handle last week, and now it's got a 7 handle. And we can show people that because I think that it's very stark once you see it on the screen here. May 31st, 7.13% compared with March 2 months. March 31st, 6.88%.
Yeah.
And nobody wants to lose their low rate at the moment.
Nobody. You have to be crazy. They're staying put. But they're not going to stay put if interest rates go down by 2 points. It's going to be a signal for everybody to come back out and buy like crazy. And the house prices, I would not put it by the housing market that prices go up by 20%. We could have COVID all over again.
Think of increased foreclosures and defaults that can lead to a wave of distressed properties flooding the market, exacerbating a decline in prices. There can be a lack of buyer confidence and limited demand. Potential home buyers and investors may lose confidence in the market, resulting in significant reduction in demand. Buyers might delay purchase or choose to stay out of the market altogether, kind of like millennials now. And these other issues coming from the money printing can lead to other problems, inflationary problems, struggling construction and development. A crisis in real estate can impact construction as construction projects may be halted or scaled back, leading to mass layoffs, reduced investment in new developments, and a decline in construction activity. Banks and other financial institutions heavily involved in real estate lending could face significant challenges, loan defaults, declining collateral values, a lack of liquidity, straining the institutions, potentially leading to more instability and more bankruptcies. A severe real estate crisis on top of everything else going right now can have broad implications, job losses, construction and related industries suffering, reduced consumer spending, a decline in household wealth, and all of this contributing to this all hell breaks loose type scenario. In a scenario where bank runs continue and the real estate market experiences a significant crisis, this can create an environment of economic uncertainty and a loss of confidence in traditional financial systems. All these circumstances can lead to an increased interest in alternative assets like Bitcoin and potentially drive widespread adoption for several reasons. During times of economic instability, individuals, investors might seek alternatives. And aside from real estate and fiat money, Bitcoin's limited supply and its potential to preserve value over time will make it a very attractive option for those looking to safeguard their wealth. Also, Bitcoin provides individuals with greater control and ownership over their property. With Bitcoin, you have direct ownership of your funds without the need for an intermediary like a bank. These characteristics are very appealing in times of financial distress like today. When trust in financial institutions is eroded, Bitcoin's decentralized nature and the ability to transact without relying on the banking channels is just going to become more attractive as confidence in the banking system continues to go down the crapper. Bitcoin also operates on a decentralized network, offering enhanced security, transparency, things you don't get in the traditional financial system. The immutability and transparency of Bitcoin transactions can provide a level of trust that traditional systems definitely lack, especially as we can see in these tumultuous times. Bitcoin is also borderless, and this allows individuals to transact globally without the need of intermediaries or facing currency exchange limitations. In a situation where, say, the real estate market faces significant challenges, Bitcoin's ability to facilitate cross-border transactions quickly with no friction may become more appealing to those seeking alternative investments or considering international financial options. And we talked about this the other day. Make sure to check that out. But certainly de-dollarization and the growing influence of BRICS, these countries could further fuel global Bitcoin adoption, especially in a scenario where these bank runs and real estate market crises can lead to further economic uncertainty. And here's how these factors may contribute to increased Bitcoin adoption. The BRICS countries, collectively representing a significant portion of the global population and GDP, they've been striving to enhance their economic cooperation and reduce reliance on traditional financial systems named SWIFT and dominated by the Western world. As these countries seek greater financial sovereignty and explore alternatives to the existing global financial monopoly, Bitcoin could emerge as the potential tool for cross-border transactions, investments, and economic collaboration. BRICS countries, with their combined influence, could drive increased Bitcoin adoption as part of their efforts to establish an alternative financial framework. Also, in an environment where traditional fiat currencies are subject to all this uncertainty, potential devaluation, Bitcoin's decentralized, borderless nature makes it a very viable alternative. Bitcoin's ability to operate outside the control of a specific government or central authority will make it attractive to individuals and countries alike seeking financial autonomy and protection from geopolitical risks. And with, presidents promoting Bitcoin and, Google Cloud partnering with Voltage and the Lightning Network, this growing adoption and recognition of Bitcoin by major institutions, investment firms, all the like, will bolster its appeal and its drive towards a method of exchange and a unit of account. So we got bank runs sending shockwaves through the system, the real estate market spiraling possibly into an all-hell breaks loose scenario, and the mighty BRICS Union and countries are embracing de-dollarization. It's like a perfect storm brewing on the horizon, but amidst this chaos lies that shining beacon of hope, Bitcoin, the disruptor that was born for this moment. Think about it. As faith in traditional financial institutions continues to waver, as the global economy teeters on uncertain ground, Bitcoin emerges as a game changer. It's the ultimate antidote to a crumbling system. As the world is seeking refuge from economic uncertainty and calamity, geopolitical tension, Bitcoin stands tall as the beacon of financial freedom and security. But it's not just about survival, it's about thriving in the face of adversity. The BRICS countries and their ambitions of financial sovereignty and reduced reliance on the US dollar are providing groundwork for a seismic shift in the global financial order. Let's seize the moment of chaos and uncertainty as an opportunity to embrace the power of Bitcoin. Let's get on the mission and do our part in the peaceful revolution. Together, Bitcoiners will reshape the future, a future where rules without rulers reign supreme and financial freedom becomes a reality for all. Remember, in times of crisis, true innovation generation will shine the brightest. Bitcoin is the phoenix rising from the ashes, ready to take its rightful place in the world. So buckle up, my friends, because the future is now, and it's super bullish for Bitcoin. Check out this video for more Simply Bitcoin Signal, and tune in for more soundtracks to the peaceful revolution dropping daily. Don't forget to like, subscribe, hit that notification bell to stay tuned. Until next time, stay solvent, stay informed, stay humble, stack sats, and keep believing in the incredible bright orange future of Bitcoin. Peace.